Good morning, South Florida. Hello, world. This is Robert Henderson Jr., certified financial planner, certified tax coach, live in the beautiful studios of WMNMA, right? The man. It sound like a wrestling team. WNMA 1210, the man. Yes, the woman is not here yet. Let me have one of those earphones. I need one of the earplugs. Yeah, the woman is not here yet, and that's Lynda. Let me see if I can hear her. Yes, she's on her way, she says. So we're going to keep an eye on Professor Keith here. How you doing, Professor?
Good morning. Doing fine.
Yeah, we're going to keep this thing rolling. My sister-in-law, business partner, Lynda V. Harris, she's on her way. Matter of fact, I've been out all week. I've been in Las Vegas, Keith, with a fantastic financial conference. You know, during the first part of the year, about the first 3 months, they have great financial conferences all over the country. And then, you know, you have to fly there. You're invited, but they're always well worth it, man. As a matter of fact, next month in March 4th, I'll be in a place called Deadwood, South Dakota. You ever been to Deadwood?
No.
Deadwood, South Dakota. They're having a financial conference there. I mean, I really get some enlightenment when I go. I meet good people from around, you know, the country who's been in this business for over 30 years, and we talk about all aspects of financial planning, investments, Social Security, Medicare, just taxes, the strategies, just retirement planning, and I really love it, and a lot of us, we see each other, been seeing each other for over 20 years. And there's some new people, but you have to be invited, and you know that this is your thing. You just can't be in this business saying you want to sell something. You actually, it has to be part of your ministry, so to speak. And most of us, it is, because we're there to learn and learn off each other, and follow what's going on with the new tax codes, the new tax laws, the new and financial laws. Because every year, federal government makes some changes. They tweak everything, and you have to stay, up, to par on what's going on in order for you to be able to articulate that, to your clients, especially if, you have clients that are really dependent on you, and they want you to know that they want to know that you know your stuff, and that you're well read and you're up on it,
Exactly right. But I mean, you talked about the federal government making changes, but I think one of the biggest things is just like we talk about understanding money.
Yes.
And I like to, since I've learned this from being at the group, that understanding money is a lot about understanding yourself.
Yes.
And it's not that the government makes changes as much as it is that every year you're changing.
Yes. As a matter of fact, my daughter Hyacinth, I was listening to part of a show this morning that comes on every Saturday at 6, and she was talking about a budget, and how you really should have each month, the first of the month, you should have every Friday, you want to look at, your spending habits and look at what you're doing and where your money is going. Because most people, their money get away from them. They wind up having more months than they have money. You know what I mean?
No question.
More time, more days in a month, and it runs out. And you really, really have to have your budget just be, cognitive of what's going on, so you can see exactly how your money flows.
Well, I remember at one time that my money actually was about 10 days long. And then
10 days, Keith?
That's when I was living at home with mommy and everything. My money was about 10 days into the month.
Less than 2 weeks.
That's what time.
But you was having a good time, huh?
Well, I was growing into it, Yeah, so
yeah.
After that, it increased in 15 days and then, 20 days. And now, finally, I can at least slide into the 31st with, $5 or $6 in my pocket.
That's very, very good. And the way we deal with money, believe it or not, Keith, I mean, a lot of people don't look at this. It really has, how your culture and your upbringing, your relationship with money has a lot to do with how you spend your money,
No question.
I mean, there's a saying that says you can tell away how a man makes his money is how he spends his money. Yeah, you can always tell. If you're making fast money, they really spend money fast, right?
Got you.
Especially ill-gotten gains.
Right.
I mean, the money just flies off, but you have to work really hard for every dime. You kind of cautious, about how you spend your money. You want to get good deals, and you want to make sure that it lasts a long time. As a matter of fact, our topic today that we're going to talk about is we have two topics, in terms of, I want to talk about diversification, because on this last trip when I was in Vegas and we were talking about how, a lot of people don't know that in your portfolio, most people want to make money investing, especially the market's been going up, although it's been volatile, especially with this coronavirus, as I call it. It's really, it's like you hear reports that it's spreading, and you hear reports that it's got it under control, and they got a vaccine for it, and then all of a sudden you hear about the deaths. Now, one American has been in China that has just died from. That's the first American they believe that who've died from the virus. As a matter of fact, when I was in Las Vegas, people were walking around, with those masks on. I don't know what the mask really gonna do. You know what I mean? Because I think it says it's better if you wash your hands. That's much more effective. Wash your hands often.
Wash your hands off.
Much more effective. But in terms of how the stock market has been affected, every time a report comes out, the market drops 200 points, 500, 600. It just dropped again on Friday, so it's real volatile. So having all your money in the stock market is not a thing. You really should have some sort of diversification. And for investing, a lot of people, Keith, their main, part of investing is through retirement plan, their 401ks or their IRAs, And they don't have a well-diverse portfolio. Oh, there she is, Lynda. Come on in here. Everybody can see you on YouTube. Come on in here and take a seat. And
the woman is here.
Yeah, the woman is here.
All rise. All rise.
Be seated.
The emperor is here. The emperor is here. Yes, thanks for coming in.
Good morning. Thank you.
Yeah,
all right.
Chilly day.
Got a little late start. And
better here than never, what I mean?
I agree.
So I like that. We were talking about diversification, how, and people think that they're diversified since they have mutual funds, but that's not really true diversification. Mm-hmm. And this workshop that I just attended, Lynda, and I just left 4-day workshop in Las Vegas, we were talking about how important it is to have life insurance as a part of your investment portfolio. Now, you want to have your mutual funds, your stocks, equity, so to speak, and you want to have your your real estate, and you might want to have some some annuities. Mm-hmm. All of them serve a purpose. And it's good if you have some oil and some gas and some gold. But you really should have some life insurance.
Amen. I'm going through that now with a good friend of ours, Robert, who unfortunately died of cancer. And, I often said this years ago, and for my women, I'm going to say it for my women.
For your women. You don't have no man? You have any man. Can a brother catch a break? You just came in here you just sat between two men.
And I'm going to talk to
Keith
my women.
I want to talk to my women. You don't come late and just say,
my women.
My people. Just my women.
It's because this situation applies. Shows I've done in the past that I've had workshops, and I tell my single women, please get life insurance, please, and make sure you have it in a trust, because at the end of the day, something happens to you, you leave it to that child who's underage, and now the next parent gets control and guardian of it, and you never liked the son of a gun anyway. So this particular case, and the last thing you want to do is have them in control of your baby money. So this particular case, as far as life insurance, Robert, she listened to us. She did the right thing. She switched beneficiaries. It is now, and it's really coming to pass what she feared, but she took steps to avoid it. And that life insurance is everything. And now that baby, who's really not a baby, 16, 17.
That's a baby.
It is. If she listens to us and continues, which she will have a great head start in life. Mm-hmm. So life insurance is everything, and how and make sure you stay on top of it. I've been married twice. I will get married again, and my beneficiaries and all that have to be in place. But you gotta have life insurance. It's important. So I'm glad you're learning all of that and bringing it back to us.
Yeah, because when we think, being a certified financial planner for over 34 years, just being a CFP,
right.
They've always said that life insurance is not considered an investment. Life insurance is just for the protection of premature death. That's it. And that's the old life insurance. Probably 30 years ago, we did review that, because that's what was just drilled into our head when we were learning and studying to become certified. And so remember, insurance is not an investment. It is just for the protection. It's protection against premature death. Now, that is true, but it has also evolved. It's kind of like saying a telephone which was invented. You know, a telephone was invented in 1876.
Is that by Mr. Alexander Graham Bell?
And you know,
or is that a myth?
No, well, it could be a myth. Who knows nowadays? Depends on who wrote it. Who wrote the history.
I know.
But the reason why I remember that too, 1876, is because I graduated high school in 1976.
Look at you.
Can you believe that? So I make that connection.
Kind of make that.
Oh, now you're bragging or something.
I know.
I'm not sure what that is.
100 years later, I was born. I'm not bragging. 100 years later, from telephone being invented, and I come out of the womb. You know, I graduated high school. But my point is that when they said life insurance was just strictly protection against premature death, and I liken that to say a telephone back in 1876 when it was invented was merely just to communicate and talk to someone.
Boy, has that changed.
Has that changed?
But not needing to get in the car and drive that 10 miles to the next house.
Right.
Yes.
Yeah,
You pick up the phone.
saved you a lot of time.
Absolutely.
Absolutely.
Yes. And I want to get on that Pony Express, to go tell somebody something.
Right.
You can actually pick up the phone. That was 1876. So that was true about a telephone. But now, in the last 20 years, the smartphone. Now telephones are not just to pick up the phone to communicate. As a matter of fact, now you can watch a movie on your telephone.
Yes, you can.
You can check the weather on your telephone.
You can record a movie on your telephone.
You can record a person not knowingly on your cell phone. Isn't that something?
Yeah, you can.
You can send emails, you can type a book, you can shoot a movie on a telephone.
Absolutely. We've had people actually shoot films on telephone that have won awards.
Yes. So my whole point in saying this is that, at one time, the telephone, just like at one time, life insurance was only strictly for the protection against premature death. Now, just like the telephone has evolved from the rotary, to the flip phone, to now the smartphone, life insurance, protection, protection is still there. It is still there. But it has evolved to something so much more. Now, you can have life insurance that incorporate living benefits, not just death insurance. It's totally different. Now, if you still have the flip phone and not a smartphone, you're missing out. In other words, if you still have term or life insurance, just death insurance, you paying for just death insurance. Now, life insurance can be used for a whole lot of things. For long-term care.
Estate planning.
In terms of if you get in a coma or all of a sudden you have critical illness or chronic illness. You can use that pile of life insurance rather than waiting until you die to have leave it to someone else and not ever using it. You could use it while you are alive. That's why they call it living benefits. So having life insurance as part of your portfolio, and the reason why you want to have it is because, in life insurance, the money that you save in life insurance, people are putting more money than what the insurance require for the death benefit into a life insurance plan. In other words, if a life insurance death benefit says that you have to pay $1,000 a year, well, people are putting in $10,000 and $15,000 over and above the premium of $1,000. Why? Because the money that goes inside on top of the premium, the death benefit part, you can put that in a fund. Well, it's not in the fund, but it's used to earn added interest and dividends. In other words, so if let's just say you overfund a life insurance policy, instead of $1,000 for the premium a year, you put in $10,000. What happens to the other $9,000? Well, other $9,000, you can put it into a fixed account that earns at least minimum 4.8, 4.5%. That's better than putting money into a bank or money market and then have access to it.
You can borrow against it?
Yes. You can borrow against it. And I used to say, man, that don't make sense. If it's my money, why I got to borrow my money? They're going to charge me interest. Well, I had to find out later on that that's just terminology. That's the technique. Because if you borrow it, that's code for not being taxed on it. It's not so much, you're going to be paying interest because they're going to be contributing you interest also. So if they're going to charge you 4% for borrowing your money, but they're going to contribute 5%, it's a wash. That's pretty good, right?
Okay, but the question is, we started off, you started off talking about diversification.
Right.
So if I have in my portfolio, in my quote unquote investment portfolio, and I've got stock in Florida Power and Light, Apple, McDonald's, all that. How is having insurance different from that diversification?
Well, let's just say all of a sudden you have money inside of this insurance plan also, and you have money inside of Apple, you have money inside of McDonald's or Microsoft, right? And all of a sudden you really do need to get a roof. Nowadays roofs. Every time you ask a roofer for repair your roof, it's gonna say $20,000.
Immediately, right now.
$20,000. You don't even look at it. Need to reach your roof repaired, $20,000. Well, you might not, if you need $20,000, if you don't have liquid $20,000 cash sitting in the bank, which most people don't. A lot of people, especially nowadays, are fully invested because they see the market going up, so they want to put more money in. And you need to get this $20,000 rather than sell your stock and create a taxable event. And if you don't have the money inside of your savings account, and if you have money, you overfund, you have money inside of a life insurance policy, you can do just like Disney and McDonald's did when they started. You can actually borrow against and use your life insurance policy as collateral. You don't need to have a job. You don't have no credit check. And then life insurance company will collateralize the money that you have in that policy in 3 days, send you the money.
So it's a means of saving for retirement.
Liquidity.
Creating liquidity.
But wait, but doesn't that give me two bills? Now I got the bill for the roof and I got the bill for the money.
No, because you borrowed the $20,000 from your life insurance policy and you paid the roof off cash. And you still have that $20,000 working inside the life insurance policy because you borrowed against it. When you borrowed against it, that's not withdrawing it, and it does not create a taxable event.
So when he gets a statement, it'll still say balance $20,000.
Yes.
It'll say loan against it, but that balance of $20,000 is still working because it's earning interest.
That's right.
And the idea is the interest it's earning is larger than the interest he's paying himself back.
Correct.
If he even decides to pay himself back.
That's right, because he doesn't really have to. Right. He doesn't have to pay.
Wait, I got a bill and I don't have to pay it?
No, because you don't have to pay it.
I need some more of those.
Because you borrowed against, your life insurance policy. All of a sudden you go to heaven and then let's say you had a $200,000 death benefit on it. Rather than giving your loved ones $200,000, they'll give your loved ones $180,000 because they'll take the $20,000 that you borrowed, 5 years ago out, and they'll walk away with $180,000 tax free. That's I call that leveraging and really making your money work twice. That's pretty smart, and you never had to sell your stock. So
Okay, so actually, when you at the end of the day, you've got your roof and you still got your investment,
and your roof is fixed. Brand new roof, $20,000.
20,000
minimum. Yeah. So again, the phone, we still use it for its basic purpose, which is picking up and communicating. Life insurance still is a death benefit, the real protection of premature death. But boy, the bells and whistles and horns,
the living benefits.
Yeah,
the living benefits.
It's amazing. It's amazing.
Keith. Lynda, have you heard recently someone that has died and didn't have insurance to be buried?
Yes.
Oh my goodness, yes.
Yes.
I can't believe it's still happening.
Yes.
Taking up collection and GoFundMe, and it's just a lot.
As a matter of fact, when I think about this, I had a classmate from high school that had a bad accident and just passed away right around the first of the year. It also included some damage to their home, and that's what we had to do. We had to take a collection to pass some money around and to help the family.
He didn't have any, or she didn't have any life insurance?
Well, based upon what it is we're talking about, I'm not sure about that, but the thing that did come up is even if they did, it wasn't sufficient. Because the first thing that came up was, well, he was a prime breadwinner, and the possibility existed that she might not be able to keep her house.
Wow.
And that's at this stage of life.
It's hard to recover at this stage.
And so that's why I say that, when you, whoever you're working with, that's why I say you should work with the Henderson Financial Group, because we go over all of this. But whoever you're working with, if there's someone's just selling you, you're working with the bank or somebody at the bank and they hustling you for, buying a CD or you're working with any so-called financial planner or someone that, your investment guy or gal. I mean, you if they're not talking to you about, estate planning or premature death or what happens to you if you're the breadwinner, or if they're talking to a female, Lynda, all females who are married, they should really emphasize to their partner, their husband or their partner,
especially if the partner is the breadwinner, like in your example.
Yeah.
Exactly.
Like, the old days, and I think I may have heard you say this, Robert.
What?
I'm not getting life insurance. You ain't gonna have some other man with his foot up on my couch and y'all enjoying the money after. That's old school. That's old. And I know you don't think like that now.
You never heard me say that.
Man. Well, no, you not. Why should I make you a millionaire? And I'm not here to enjoy. No, don't do that. Especially if you got children and grandchildren. You know what I mean? For all my women, you better go know where their policy is, check it, make sure the ex or the first or second wife he didn't change, make sure he updated the paperwork, and you have sufficient amount of money to keep on stepping. Now you're going to be heartbroken. The love of your life is gone. But he would want you to keep going in fashion.
Right. And make sure it's more than $25,000.
Oh my goodness. Yeah.
$25,000. You think about it, Yeah. I mean, it's better to have it or not to have it, but $25,000 if something happens to the breadwinner, that's not going to carry that far.
No.
$25,000. Now, some of the policies that we mainly talk about is the living benefit policies. They cost a little more than the death benefit, but there are some great term insurance. The term insurance that you can convert to permanent insurance. I like those, Lynda. Keith, I actually like those. And what I mean by that, in terms having
without
part of your
insurability, you don't have to take another physical exam. The ones
No, I mean you can have annual renewable term. Yeah, you don't have to take a physical.
Okay.
But when you have annual renewable term, the older you get, the more the insurance is going to cost. A lot of people, think that term insurance in the long run costs, they saving money rather than having, permanent insurance. But that's not really true, because data shows you that, permanent insurance, especially level pay premiums, you wind up paying less in the long run than having the term insurance or cheaper. But term is, if you can't afford to put $5,000 or $10,000, or more, $20,000 a year into a risk management strategy like a permanent life insurance, an IUL, then you can always, insure yourself against protection against premature death by having a term. But when you have that term, I want it to be a convertible term. What I mean by convertible term, meaning that right now it's tight, but you want to have some coverage. So you can get a $500,000, $1 million policy. They can cost you, $500 a year. Depends on your age.
Okay.
But then in 10 years, after you've, made that hit or made that movie, Keith, or Lynda, built that building.
Right.
Now you want to convert that term insurance to a permanent insurance. And the good thing about convertible term is that, let's say you're, 30 years old right now. And in 10 years or even 15 years, even 20 years, you convert that to a permanent policy. You don't have to take an exam anymore, a medical exam.
That's huge.
That is huge.
That's huge, because at least you don't have to worry about insurability. For the first time in my life, have engaged the services of a nutritionist. And it used to be I could just snap back, I need to get in this dress, just snap back, you run a couple days, look crunch. It's not snapping back, Keith.
I'm here to tell you.
It's called.
It's not snapping
It's called
back.
two things. So it's called one. It's called age. The other one is called gravity.
Oh, cruel.
And you can't stop neither one of those.
No.
You cannot stop time.
It is not snapping
And you
back.
cannot stop gravity.
So because I'm getting married again, and I gotta make sure
You keep threatening to do this. How many
Yes,
times
like, oh my
are we going to
God.
have to?
Oh my God! Everybody get back! Everybody get back! Here she come. She's trying to get married. Oh, stay away from her.
Oh my goodness!
You got to stop announcing that, Lynda.
you said speaking in the universe. Now how many times you
All right.
said
Yeah.
that?
Oh, yeah. You, but you got to believe it too. You
I believe it.
I mean, just saying it. You
I
can't
have
be like,
engaged the services of a nutritionist so I can make
what
sure.
does it have to do with anything? A nutritionist
Because I need
and
to
marriage?
look good.
Oh.
I need to make sure I snap back and look good. I mean, listen now. I recognize those two things you just said. So I am doing something about it, and I'm being proactive.
Keith, can you tell her at a certain age, men, since you're always talking about how women, let me tell you, sister-in-law, at a certain age, because you can't stop gravity, because it's going to drop, and age, you can't stop that because the sun coming up and going down.
I want to be here.
Okay. So when you talking about getting married again, let me tell you something. When you get past a certain age, it's the mental thing that counts, honey.
Well, it
Not
doesn't
the- not
help
the
to be
physical.
easy on the eyes.
You easy on the eye
It
now.
doesn't help.
What you-
But I mean,
come
I
on.
got to make sure I stay easy on the eyes. That's all I'm saying. Is that bad? Now who can sit here and tell me that's bad?
Okay,
Work
then,
on
let-
that mental. Work
let's-
on that
let's-
mental.
I'm working on it. I think
It's all about the
I'm a
mental.
nice person.
It's
but I'm not
all
gonna,
about
I
how
don't
you
have to
feel.
interview.
Wait, you don't have to. You don't have to list the attributes for us right this
Thank
minute.
you.
We're okay. It's not gonna-
Y'all, I almost got sucked into that.
But it's the mental, Lynda. Everything. When you get a certain age, everything is about the mindset, the mental.
I agree. I'm working on that, but it doesn't
conversation, how you make me
hurt to be
feel.
easy on the eyes. And
No
to be
question, no
single
question.
digit in
But-
your
But
size.
don't spend more money on the mental than the physical.
Okay, done.
Yeah,
Right.
because the easy on the eyes part, you've already got that handled.
Right,
Okay,
We-
right.
thank
never
you,
worry about
gentlemen.
Yeah.
Right, unless you're trying to trick somebody. Now, find out easy on the eyes, and you start to talk, and the man go, "Oh my
my
God,
goodness,
what
I
is
can't
she
hear this.
talking
I
about? I
can't
can't
hear
hear
it.
this.
I can't hear this.
Oh my God, psycho babble. Oh, no, when you get a certain age, I'm telling you, it's that companionship with that whole mindset that you get me.
Okay.
That vibing,
Okay,
Yeah, you
thank
feel like it, I feel like, yeah, let's do this.
Oh,
you know?
okay.
Yeah, that is so charming. You know what I mean? Don't you think so? That's so charming and seductive. Like, yeah, that compatibility with the mind. Hey, honey, you want this? Yeah, I want that. Oh, I like that. It's just the mental part. Let's go listen to some music. Let's do this. I mean, you can have all that and not have the mental part. All right, let's get back.
All right, let's get back. I'm back.
So portfolio. We must agree that even though you're looking at your stocks and your mutual funds and your ETFs, now I want you all to know this because I've been doing this over 37 years. And it reminds me of, last year, the Golden State Warriors. Remember that, Keith, the basketball team?
No question.
And it was just like, oh man, it was like the one to beat, right, Lynda?
Splash Brothers.
Splash Brother, Curry, and all that, right? Now you look at them right now, they don't even want to put them on TV. They don't even want to. The networks NBA don't even want to show the games because
That's bad.
I think they basically done almost last place, if not last place.
Oh my goodness.
I'm saying that to say, the tables always turn.
Gotcha.
I mean, you always, it's part of living. I mean, you cannot, in order to live, death has to occur. Do y'all know that?
Yeah.
And people don't like to talk about that. I mean, so what I'm trying to say is that, you have seemingly good days and bad days. I think they're all good because the things that are the most toughest days really turns out to be your most learning better days.
I
You know
agree.
that, right? You agree with that?
Yeah, I agree.
No question.
I mean, because you measure, man, not when things are going great. You measure, man, when things are what?
Going horrible.
Chaos. How is he or she handling it?
Mayhem. Yeah.
How are they? Are they firm? They have poise. They have leadership. You can only see that when chaos and everything is going crazy. You know what I mean? That's how you can really see that. I mean, that reminds me how when I think of that, I think about the President Obama. During 2008. I mean, we thought that American capitalism, as we knew it, was just going to be gone.
You're being decimated.
Right.
Yeah.
No question.
But it didn't happen. I mean, it came back. And now you got Trump in there. He came back with this tax stuff, and and the businesses took off, and now the market is really went up even higher, and now they impeached him. The House did, but the Senate exonerated him. Mm-hmm. That's the word of the day. That's the word of the day. Exonerated.
Oh, he's still impeached. But he wasn't removed.
He wasn't removed, so he feels like that's exoneration. So the word exonerate, let's spell like E as in Easter, X as in X-ray, O as in ocean, N as in November, E as in Easter, R as in Robert, A as in Alpha, T as in Tom, E as in Easter. Exonerate.
I like it.
To be free of blame, clear. Mm-hmm. To be clear, to be exonerated. So Trump feels like that. As a matter of fact, he's firing the people who went against him. Boy, I tell you, you couldn't have wrote this script.
You couldn't have wrote it.
No, you couldn't have wrote this script, man. It's like
sit back and watch the show.
So my diversified portfolio will exonerate me from poverty?
Yes. Well, I wouldn't say. Well, I will say that it will give you liquidity, and control, and why I really, really like having life insurance as part of your portfolio, because it gives you what we call completion.
It may exonerate your loved ones. Poverty. They'll be there to ball out.
Explain that, Miss Harris. Miss Lynda V. Harris. Explain that. You and your girls.
Well, his wife will be the beneficiary, and so it will exonerate her from living in poverty, that $1 million policy.
That's true.
I mean, unless she just blow it all on, find a Dexter somewhere and blow it all, which I doubt, because I know your wife and she's smart.
She won't be doing that.
She won't be doing that. But it will exonerate her from poverty. Right. So you can. I like that. I like the way you used it.
You should. And the reason why I started going down that and I talked about Obama and I talked about Trump, and what I was really trying to say is how the market has been going up from, in 2008, it was 6,000, the Dow Jones Industrial Average. Now, it's over 29,000 after Obama left and Trump came in, and just, it kept going. So we've been, really, really on an 11, 12-year run. What I'm trying to say is that if you all are, anybody listen to me that's over, 21 years old, it's timing, and timing is everything. And just because the market is just running and running and running, don't think that it's not going to retreat and come down and give back. Mm-hmm. Just think of a roller coaster. That is part of life. That's part. If you're going to live, you got to expect that there's going to be death. If there's a beginning, there's going to be an ending. And I'm amazed at so many grown-ups that are past 40 years old. They don't understand this. And that is amazing. It will. So you have to be ready. In other words, in your portfolio, most people want to just, you let your horses run, you let your winners run, but you gotta get ready for defense. Even some of you Bible listeners, scripture people out here, Keith, I don't know, Lynda, if you can help me, but Keith, during that time.
Let the church say amen.
Keith, even the biblical story that says, even Joseph told Pharaoh that there was going to be a famine, right?
A famine, absolutely.
Yep.
Absolutely.
Yes. Times is good. He said, listen, times is good. But you got to start saving up some of this grain. You got to start doing this. People are like, nah. No. When all things are happy, things you feel are good, you got to start taking some cover, because that midnight is coming. Yeah.
Prepare for war in times of peace.
I like that.
Amen.
Yeah. That's all I'm saying. So life insurance and part of your portfolio. Because when this market hit, I don't know if people are going to be jumping out the windows, but they're talking about this thing correct 10% or more. 10% of, 29,000 or 30,000 Dow, that's over 3,000 points. People will be blaming, looking. There'll be divorces, there'll be foreclosures. There'll be a whole lot of stuff that's going on. Now, do I think that's coming? Yeah. Matter of fact, I know it's coming.
It's coming.
Now, can I tell you when? No. Just like I don't know when death is going to occur. That's why it's called a surprise. But it is coming.
So that's why you say prepare now. It's going fine now. The party's on. but you need to be, as you say, saving your nuts or.
Yeah. Not eating all your nuts,
not
but
eating
saving
all
your
your
nuts.
nuts. Yeah,
Right.
yeah,
So you should have.
You should have.
Some sort of insurance protection. You know, the funny thing about it, people have, everybody, you got to have insurance on your car, right?
Right.
People got old cars and fully insured. Can you believe that? Fully coverage. They got a deuce and a quarter. Diamond in the back, sunroof top, digging the scene. They got full coverage on that.
Now you have really shown your age now. Listen, get the phone number real quick.
The phone number here?
No, to the Henderson Financial Group.
Okay. Oh, yeah. You know what? Because I need you all to call 305-825-1444. Let me say that again because I feel somebody pen or pencil wasn't working.
Mm-hmm.
Give you time. Okay. 305-825-1444. And Keith, I'm glad you brought that up because Bill Marecki and his wife Shauna, they're going to be coming to our office in March 28th, March 29th, and March 30th. And that's on a Saturday, a Sunday, and a Monday. We're going to do a full, I mean, from the bottom to the top, federal benefits workshop. So if you are an employee, if you work for the FBI, the CIA, the DEA, if you work at the post office, if you work for the Veterans Hospital, if you are a air traffic controller, if you work for the courthouses, if you are a federal employee, we're going to talk to you about federally, yes, because most people have the wrong type of life insurance. You know that with the federal benefits,
Yeah.
federally, and we're gonna educate you on how to use
Right.
and get that match, how to use that TSP to the best that you can. And we also going to talk to you about when the best day or the best time of the month to retire. Did y'all know that?
Yeah. Well, we knew that.
Yeah, I know y'all know that. But hey,
A lot of
did y'all
people
know that? Did y'all know? Did y'all know that there is a particular time of the month when you should put in your retirement paperwork and retire? Yes, it is. I mean, it's a science. They don't tell you about it. All 3 million of you all who work in the United States as federal employees for the federal government, because you got to get ready because it could be another shutdown. I don't want to make you feel bad, but that you got to prepare, as Keith said, for in good times for war. So I want you all to call our office. Let me give this number again. Let me give me the number. Give it out.
Number 305-825-1444. Henderson Financial Group.
Call.
305-825-1444.
So I want you all to call Monday because we're going to do 3 days. That's why we have to do 3 days because a lot of employees. And I want you all to tell each other, call our office, put your name down for either that Saturday or that Sunday or that Monday.
No
Okay?
excuse.
No
You
excuse.
got 3 days.
3 days. This is March 28th, March 29th, March 30th. We're going to have Bill Marecki. This guy is a genius, an expert in this whole federal benefit space. He's actually come to our office. He's actually have educated everybody in the Henderson Financial Group to become specialists in this field. He's going to be in the office himself, all the way from Michigan. He's going to be here with his wife, Shauna. So you got to be here. You got to be this. If you don't want to read all that manual on the best way and the best strategies, get the bang out of, you get the buck, what did I say?
The most bang up for your buck.
Yeah, the most bang for your buck from your federal benefits.
Right.
You gotta come here. We're gonna have refreshments.
And it's free.
And it's free. That's right.
There is no excuse.
Well, it's not really free because you do have to make effort.
Okay, you're right.
Yeah, there is an investment. The
Yeah.
investment
Of your time.
is just time.
That's true.
And
Do you
time.
think people will still get it though? Do
Wait,
they think
time-
enough of themselves to
time and
come out
attention.
there and invest in themselves?
Well, here's the piece that we actually have to always consider.
Okay.
And I was thinking about that when you were talking about the insurance piece. And if you had been talking to me 6 years ago, and the word insurance would have come out of your mouth, my eyes would have glazed over. I would have stopped listening. I'd have been just shaking my head like I got it.
But I've been sounding like wow, 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 wow.
Well, but because here's the deal. When we make decisions at certain parts in our life, we close off whatever that little place is to anything different because we've already decided. But what we need to determine on what we need to kind of get in the habit of is, like you said, things change every year. That you got to go back and review some of those decisions because they may have been good at the time you made it, but that doesn't mean it's still good today. And I'm so fortunate that we started to work together because I was in a meeting the other day and a woman who was leading the workshop was talking to people about their employment and what have you. And she said, now, if you don't want to get in trouble, make sure you don't do this, and always be remembering now, if something happened, do you have your 6 months? Do you have 6 months of money? Do you have 6 months of money for expenses so that you can sustain yourself if you don't have this job? Remember, that's one of the things people say, you need to have 6 months
emergency
worth of emergency funds.
Right.
So, and her question very blatantly was, do you have your 6 months? And it was kind of challenging. But I guess I was one of the few people in the audience who, in their own mind, could say, well, yes, I do.
And most people don't think about that.
Exactly.
And we're talking about adults, too, not children. So, yeah.
But to Keith's point, it's hard to get people to unlearn what they've been running with for so long. And then we always say just because you don't know about it doesn't mean it don't exist. So there's so many new things. Just like you said, the cell phone is not the cell phone. The Alexander Graham Bell's invention has evolved. And so you need to evolve as well in your thinking for your finances, for protection of your family. And Keith is being honest. If you would have said it 6 years ago, it would have been a shutdown. But you can't afford to shut down. Nobody out there can afford to shut down. I can't afford to shut down. I'm seeing a nutritionist. So you got to keep reinventing yourself. You got to keep going. You got to keep molding. We're not snapping back like we used to. Meaning what you learned back then does not and may not apply now. It most of the time it won't apply now.
It won't apply.
It just won't. So you really must, when somebody's having this type of workshop, and this is something that people pay for, this information, you got to invest in it. You got to invest your time.
Invest your time.
So that's going to be
that's
going to be at our offices. So I want you all to call Monday. Call Monday and say, hey, you want to put your name down because you want to register. Now, it's a 3 days. So either come that Saturday or come the Sunday or that Monday because I know people schedule different, especially postal workers. So call the office 305-825-1444 and reserve your seat because seats are going to be limited. I mean, each day we're going to have maximum probably 25, 30 people. So make sure that you get in early and registered. Okay, and tell your friends. Yeah. Really, tell your friends.
Share the knowledge. Don't hoard the knowledge.
Right.
It's okay.
We're going to actually tell you when is the best day to retire of the best month, and if you're getting the pension. Because one thing I like about, federal employees, most of you all are getting not only Social Security you qualify for, some of you all are getting Social Security when that time comes. You also get a pension, and you also have, which is equivalent to a 401k, that TSP. We're going to tell you exactly how to take advantage of all of that. So I want you to come to this workshop. Again, write this down. That's March 28th, March 29th, and March 30th. Okay? I want to segue right into. There was another topic that we were talking about in Las Vegas in the workshop is how more than 40% of Americans are choosing to work past age 65. What do y'all think about that? I mean,
I love
you
it.
See that?
Oh, yeah. I want to work because I want to, not because I have to.
And why is that when you say because you want to? I mean, if you won a $100 million lottery, would you not work or just go and sell, or would you work?
I would work, but I think that definition is not what it used to be.
What definition? What do you mean?
The word work.
Okay.
The word work. If you love what you do, you will get out there and do it, and it's not work anyway.
Right.
So I love a reason to dress up and put on makeup and put on heels. So I will be out there, yes.
As a matter of fact, we're going to the symphony tonight, right?
Absolutely. I got my outfit.
Yeah, we are going to go to symphony tonight. Yes, we do. We're going to the symphony tonight. We're going to have a good time. You made me think about that. So I'm not going to be in the office all day today because I'm going to go to a symphony. So we're going to dress up and go have dinner first, right?
Yes.
The whole office, that's what
Yes.
we're going to do. Our whole entire office, we're going to do that. So Keith,
but the question is, when did 65 become the magic number anyway?
Oh, that's been programmed because, actually 62, as soon as, one can start collecting their Social Security, a lot of people have been programmed. And 65 is because of Medicare.
That's
the
magic
insurance,
number
the magic number.
Oh,
Because
yeah,
most people,
yes,
a
yes,
lot of
yes,
people
yes.
are working right now just, because they have to have that health insurance coverage. And if they can get to age 65, that's the promised land, that's the promised number, then they don't have to pay all this money for health insurance and they can retire. And a lot of them are just struggling trying to get to the finish line. Some of them make it, some of them die, some of them don't make it. But that's the goal.
That's the goal.
Is to get to age 65. And that's for a lot of people, Keith, who don't really enjoy what they're doing, their labor. It's like Lynda said, they're not enjoying it,
Yeah, yeah. But
And-
you were saying
More people.
More people, yeah. And I can see that because 65 is the new 45. And so, we still looking good.
Hey, there you go, that time and that age. You still wrestling with that time and that age.
Okay, then.
Yeah, you're still wrestling with that time and age. But I think that for a lot of people, especially people who have worked for like firefighter or, worked for a correctional officer or even a nurse, because a lot of nurses started, when they were very young. They're in their 20s. And now they've been working for 30 years and they're just, 50 years old, 55 years old, and they want to retire. And they retire, you can't get Social Security or, at 55 or Medicare. So you really have to have your ducks in order, your money in order, Keith, as you say. The lady said, can you do 6 months? And some people just said, they figure they did 30 years. It's just time to stop. It means no more money for me, no more money for you. We're going to sit down and watch Netflix or whatever. But you got to really think this plan through economically. And if you can't do it, that's why it's good for you to call our office, 305-825-1444, because you got to be able to look at what's coming in your house and what's going out of your house and your costs and your standard of living.
I have a client, Robert, that has an autistic child, and she's asked me, I need to make sure he's taken care of. I need to make sure, because you can't say he's going to grow up, have kids, and retire and work. He's going to need care the rest of his life. And so as a mother, she's there to make sure, he's in the right programs and what have you. But when he becomes an adult and she can no longer, physically take care of him, she needs to make sure there are funds that will maintain his lifestyle, his living arrangements, his caretaking.
Now, is he getting an inheritance from her? Because she's probably, if things happen right, she would probably leave the earth before him. Correct.
Correct.
Now, is she doing all what she can do? Because does she have a really nice insurance policy?
She has a nice insurance policy. I believe she should increase it because of this. It's not like he's going to end up making money for himself.
Right.
That insurance policy is going to have to be put in place to take care of him the rest of his life.
Yeah, because as long as she lives and she is employed or she have assets or she has cash flow, she can take care of him, correct?
Right. That is correct.
The problem is after she leaves the planet. So the only way, if all of a sudden if she's going to either hit the lottery or she's going to marry rich, a way to make sure that what you want to happen will happen is to have insurance, life insurance. Absolutely. I'm going to say it again. There's only one way to make sure that what you want to happen will actually happen is life insurance. You can't, a stock portfolio, real estate, there's nothing under the sun that you can put the G word guarantee on other than insurance.
So when you used the term a little while ago, risk management, that's usually something we think about when we're thinking about businesses. But in this instance, we're talking about insurance being risk management for the unknown.
It's risk management, the way, Keith, commercial businesses and employers use that is because risk management is protection. When we think about life insurance, it falls under the risk management because risk management is a protection against premature death, or a risk management is a protection against some sort of catastrophe that can happen, a slip and fall. A business always have to try to mitigate any sort of lawsuits, any sort of damages that may happen to the business or its employees. So they have a risk management department. You follow me? Part of individuals' risk management is having a personal liability insurance. That is to help mitigate just in case something happens. So risk management, when you actually have a auto insurance policy, when you have your insurance, that's part of risk management, because you don't want to be able to take on the risk and pay if any damages. You want to shift that risk to an insurance company in case something happens. They will pay. You follow me?
Got you.
And people do that all the time for their homes. They do it for their cars. People even insure their jewelry, but they won't insure their lives. That's amazing to me. I mean, think about that. I mean, they insure everything else, but themselves. Think about it. I mean, you have even gangsters, even people in the hood.
In their mind, they just, we want to think we're going to be here forever. We don't want to think of death. It's such an unpleasant topic, but I'm going to tell you, like you said, there can be no life without death. And I think, to me, it's you kind of feel better about yourself when you have your affairs in order.
You do.
You really do. I mean, day in and day out grind. That's one less thing that you know in the back of your head and back of your neck at the bottom that you know you should take care of and you didn't. You can check that off. And that's a sense of relief.
Yes.
It really is.
It's like a person who hadn't had a bath in 3 days. All of a sudden, you take a bath. Now, you know, if you haven't had a bath in 3 days and you take a bath, man.
Yeah.
Especially a hot shower.
Yeah.
One with the pressure, the pressure coming out just nicely, a stream, and you ain't had a bath
Soft
in 3
water.
days.
Yeah.
That's that same feeling you're talking about, right?
Feeling.
That's that feeling.
That makes you feel better, and the people around you feel a lot better.
It really
too.
does,
It
Keith.
really does.
You say, oh man, and you thought, I should have done that a long time ago, 3 days ago.
Yeah.
Or you feel like, I feel so good. You just feel good, and like you say, Keith, it really does.
It does.
How you conduct yourself, your life. I'm glad you said that, Keith, because how you conduct yourself, your financial affairs, believe it or not, it's never just for you. It has a rippling effect for everyone who loves and care about you.
Yeah.
You believe that?
I do.
It really does. Keep you like you just saw a light bulb.
Yeah,
No, I did just see that.
See that?
I saw that.
Like, I mean, really, it does. See, a lot of us, we're thinking about just me, it's my life. No. If someone cares about you and loves you, what you do, the things and how you carry your life, really is it's not just for you. Because the people that love you and care for you, they're going to feel pain if something happens to you.
And everything is in disarray.
Oh,
and they
man.
got to fight over it. And
That's why parents really want their children to be fine. They want their children to marry someone who's going to love their child like they love their child. Because it gives us a relief. If all five of my kids are happily married, I'm like, it's like that shower after 3 days.
Life is good.
Life is good, you know? Because if that's not the case, you know when something happens, who they coming to?
Mom and Daddy.
Mom and Daddy, I need this.
Yeah,
I need that. Lord, have mercy.
Yeah, that is something that I used to tell all of my sisters and brothers. That said, everybody who's in a relationship always feels the same thing.
Yes, they
Maybe
do.
not the same way.
Right.
But if there's an issue with you and I know it and you're one of mine, then I'm feeling that too. If you're uneasy, I'm uneasy.
I mean, look at Kobe Bryant.
Yeah.
People never met him crying, right? They crying. They don't feel like his wife and his children. But they're crying. They feel really bad. You see all those people out there?
Yeah, because they were invested in.
They were
him.
affected by him. They
Exactly.
was affected by him. And you too, each and every one of us. You think, this is my life. I'm gonna do what I want to do. Yeah, that's true. But I want you to know, if you don't have any life insurance and you die, who gonna pay for that?
You don't really love her. You don't love her.
Well, I won't say you don't love her.
Show me how much you love me by making sure That if something, and I'll show you how much I love you by making sure if something happens that you are okay.
So that's part
So
of
if you really love her, you make sure you have the proper portfolio,
So do
you
I-
have the proper care.
Do I hear that's part of your prerequisite when
Absolutely.
you're on your third marriage?
It takes more than love. You know, we've debated this. It takes more than love.
So, Lynda, when your third marriage, when you get married, I'm going to say, Lynda, that dude must have a big insurance policy.
I will have one and he will have one, and we will, we won't mess with each other's assets. That's important. You got to straighten this stuff
Man,
out.
here you go. We won't mess with each other's assets. You know,
You know,
you'll say that.
it's just, you
what
just
if he
got-
have more assets than you? You still going to say that?
Yes. Of course, I got mine. I'm not trying to trick a.
Be careful. Be careful. We on YouTube. You're being watched and heard. Be careful. Don't trick a. No, you sound like Kanye. You sound like Conway West.
Do that.
No broken.
So listen.
I will. He can have his. I will keep mine. I'm not trying to be disingenuous.
Call our office.
And you want to make sure that everybody in this is exonerated from the
Exactly.
pain that may come up.
Exonerated. That's right. Everybody's clear. Hey, Keith, I see you the Spiritual Principle and Prosperous Life book. I see it over there.
I'm walking with it almost every day now.
I see. Are you sharing it? I mean, tell the
Yes,
radio
I am.
listeners about it.
I am sharing
Tell 'em
it.
about
Who wrote that book?
Yeah, who wrote that book? Keith?
Actually, there are multiple authors of the
Right.
book, but it was compiled by over there.
Anybody you know?
Anybody know? Black dude with glasses
It
on.
says Robert Henderson Jr., CFP.
Spiritual Principles.
Spiritual principles, and I think the thing that occurs from this, just like as we were talking this today, is that once you understand yourself and that everything comes from or starts with where you are spiritually, that money also is an outward manifestation of where you are spiritually in your life.
That's 100% true. That is 100% true.
So at the Henderson Financial Group, we're interested in your total being because your total being determines what your total life is going to look like. We're not just interested in selling you stuff.
No.
We're interested in your learning and then you making the decisions that will turn your life around.
Yes, yes.
Amen.
Well said. We got to go. I see Rosie.
And you know, we didn't do a commercial all show. Y'all just got
My
excited.
goodness.
Oh, that's right. We didn't do a commercial.
We did
at
not
all,
one
did
commercial break.
It was good information.
Okay, it was good information. We was rolling.
We was rolling.
We got Rosie in the studio. It's time for us to go. I mean, we've had a great show. You know, we hope you all enjoyed it. Don't forget, call our office on Monday and register. Put your name down for our March 28th, 29th, 30th federal benefits, employee benefits workshop with Bill Marecki and his wife Shauna. They'll be in the office. They're coming down from Michigan just to do this 3-day workshop, and we're all going to be there. You'll meet us and spread the word. 305-825-1444. Parting words, Lynda?
Parting words, check out our website, www.thehendersonfinancialgroup.com, and make sure you're at that workshop.
Keith?
Please invest in yourself.
Keith, say it last.
Have a good time.
Happy weekend. Love you. Peace. Gotta go.
All right.